Yo, what's good, everyone? Uh, I'm happy everyone was able to join and chat. Hopefully, I'm looking for a lot of people, a lot of more others to join us sometime this week. A lot of people haven't even seen the message of me sending out the invite, so we will have a lot of individuals that's going to join us probably later on this week, hopefully. But if you are in the chat already, welcome. Today I am creating this video basically over some back testing that I did last week. So today in this video, I want to have a refresher of the actual strategy. I'm going to explain market structure, higher highs and higher lows. And also I want to discuss the Fibonacci, which is the way that we draw it up is from bearish to bullish or bullish to bearish. And talk about some entry points, which is the 50 to 61.1 area. If the market does not pull back to our areas, we are not taking a trade. Remember that. Also discuss some of the TP areas, which is be back to the 0, or it's going to be back to the negative 27 extension, or you can flow. Because today I'm going to show you how you really don't have to pay close attention to the higher time frame, because market structure is market structure on any time frame. What I'm going to start showing you is just entries on M1, which can sometimes just flow with the overall direction of the higher time frame, or for a lot of scalpers or whoever just wants to compound. I had some students, I taught this to 2 students, and they both are using it for their top tier account, and they are just compounding 2,000 at a time. The other one on a smaller time frame of 400 to 500 at a time, getting out, gaining another 400 to 500 and getting out. So today is just going to be a lot of good information. And then at the end of it, I want to show you even more confirmation of knowing when to get in and when to get out of that trade. So stick around, watch this video. Everything that I'm going to be showing is going to be worth it, I'm telling you. So before we get started, I just wanted to go over market structure. So we know in an uptrend, right, the market will push up. Then from here, it will push down, basically creating a higher low and higher high. But we know until this is broken, this becomes a higher high, right? So now it breaks above this higher high. So what do I want to do? I usually want to mark that higher high. And then if it wants to stay in structure, it will come back, pull back to that higher high, push off that higher high, breaking through what? This new higher high. Why? Because this is happening over and over. This is structure. This is market structure. Broke through that higher high. What do we know? It pulls back to this higher high. And from that higher high, it pushes up. If it wants to continue to stay in structure, it would come up, breaking past this higher high. But let's just say, for instance, we come back to this higher high, right? And we don't break it. We get basically like a double top. Change the color real quick. So say, for instance, we come back, give us a double top, and it's, at our last higher high. That's my first indicator that this uptrend is now becoming weak. Why? Because it couldn't break through the last higher high. It's now becoming weak. It couldn't break through the last higher high. And look what was usually when you backtest and see this happening, it will usually push down, breaking through what? This higher high, this last higher, the second to last higher high, whatever you want to call it. I usually say last higher high, but I'm thinking about this one. I'm not considering this one. I consider these two as a double top. But this right here, this pull will usually come down and break through that last higher high. So it came down, breaking through this last higher high. I don't want to enter on that. I want to see a pullback. When this trend line is broken and it came back below, this higher high, to me, that's telling me that this uptrend is becoming weak now. So what I want to do is wait on a pullback to our 50 to 61.1 area. So it gave me bearish movement. I need to see bullish. I got my bear and I got my bullish, right? We take our trade inside of where? our 50 to 61.18 area. So entry would have been inside of here, boom, inside of there. Stop loss can go right above, you know, this double high so that we were not losing as much. Or if you want, depending on what you have in your account, you could put stop loss anywhere in between here. But to be on the safe side, we could put stop loss just above this higher, this double top, because then we now know that we have a double top, we have a break of trend line. We are confident in taking this pullback on this sell and hoping that we can sometimes, you know, flow with the overall direction on higher time frames. Because believe me, when structure has been created on M1, it's going to lead into the higher time frames. So when you take this sell, you can take your TP back at zero, but if we're on a 1 minute, that's, you know, that happens too easy, or that's not even a lot of pips from, you know, the 50 to 61.1. You can take it at the 27 and get out and be safe and look for another trade setup. Or sometimes, like I said, higher time frame doesn't matter. But in this case, say for instance, if you see higher time frame showing sell, you can hold this sell and gain more profits instead of just taking it at the 27. So you can start to flow with the overall higher time frame with a good entry and not have to truly worry about when to get out and when not to. If you get a good entry on the M1, you can sometimes hold the trade. And later on in this video, I'm going to show you exactly when to get in and when to get out. Backtest last week, and I seen some confirmation of my past strategies that I tried to use, and basically all of it just start to click. And now I'm showing you guys of everything that I know. So let's just stay on structure. We got higher highs, higher low, broke through this higher high. What did it do? Come back to this higher high, pushed off of it, creating a new higher high, breaking through this higher high, came back, created a higher low at the higher high. And nothing but support and resistance too for a lot of new traders. Support and resistance is nothing but higher highs, coming back to the higher high and pushing off of it. But when a trend is showing me double top and it comes back below a higher high, I'm now looking for a pullback to the 50 to 61.1, 61.8, and I'm looking to take a sell. And on higher time frames, you can take it back at the zero, or on lower time frames, you can just flow with the market. So just remember this. So now let's go back and do some back testing. I'm going to show you guys a little bit of what I'm saying with actual market structure. So yep, it's turned off. Okay, where am I? US30. Let's just get to the front. And I don't really want to use last week. Let's yeah, we can start here. No matter where we start. Structure is happening everywhere. So let's look at this area right here, right? Boom. What do we see? We see the market broke above this last lower low. It broke above this last lower low. I'm gonna change the color. Make it bigger for this. So if it wanted to continue to be a downtrend, it would have came back to this lower low and it would have pushed down, right? But that didn't happen. What did it do? It broke past this lower low, pushing up here. So now we know that this downtrend that we were in, boom, is now becoming weak. Why? Because we broke past this lower low, strongly broke past. So when we got that showing us, what do we want to do? We want to wait on some type of pullback, right? We need to see some type of pullback. Cut on the candlesticks. So we got bullish pushing us all the way up here. And now we're starting to see some bearish momentum. So now I can put my fib where? At the top of this bull. Top of this bearish, my fault. So we got bullish going up. Now we're starting to get bearish, so now I can start placing my fib right there as it's pulling back down. Where do I want to take my trade? And pay attention to this, because this will save you from guessing. This will save you from getting in trades that you shouldn't even be in. Be patient. Wait for the pullback. A good pullback is the 50 or 61.1, 61.8 area. So when we use this, so when we placed it here, right, we got our bull, bearish. Did we ever come back to the 50 61.8? No. So what happened? It went to the 38. This is why I don't use the 38. This is why I don't take entries at the 38. I wait for a good amount pullback, because when you take this buy, look what happened. It dropped again. That's not a good buy to me. All I do is when it doesn't pull back to my 50 area and it start pushing back up, I'll wait on the next bearish movement. Boom. So now it's showing me bearish again. Did we get to the 51, the 50 to 61, 61? I'm gonna just say 61. So did we get to the 50 or the 61? Yes. All I did was be patient. It didn't, when it gave me this first bearish, it didn't come back. It pushed up to 38, pushed all the way back up. I only take entries at the 50 to 61.61. So when it gave me this bearish movement, now I'm patient. I gotta highlight it, my new zone area. All I did was I'm just following it with my fib. Hit my area. I take my trades at the 50. Boom, I'm in this trade. My stop loss can be however pips I'm willing to lose. And now I can take profit here for 3,000 pips. Or where can my second TP can be 27 extension for 5,000 pips. Get out the market. See, you see how he's patient though? Because when we first had it on this first bearish movement, it was going down, but did it ever come to the 50? No. So we leave it alone. We don't take an entry. Now it's pushing back up. Now it's coming back down. As it's coming back down, did it get back to my 50? Yes. Hit my 50 mark. I'm taking my trades always at the 50. Where my drawdown, my stop loss can, if I take a trade at my 50, my stop loss can be literally right here, because it should push from this area strong. If this start to break past this 50 or 61, I know I should be looking to get out that market, because it can still be in an overall downtrend. But from market structure, saying that it's breaking above this last lower low, cut back on the line chart, breaking above this lower low, it pushed above. Now I'm looking for a deep retracement to the 50 or 60, 61, which it gave me right here, because I adjust my fib. Why? Because we never hit the 50. Now as it's coming back down, I'm taking my entry at this 50, riding it back to the 0. I can get out, like I said, if I'm using a 0.5 or 0.10, wherever, this is a good amount of pips. Get out the market. If I'm using a 0.5, this is somewhere around half of that. It'd be what, $1,000, $1,200. Take it, get out. Or you can ride it to the 27 extension. Smacked it dead in its chest for what, 2,100, 2,500 if you're using a 0.5. But regardless of what you got in your account, structure doesn't change. Q or whoever, some great other trader can put a standard lot right here, come up $3,000 easily. It doesn't matter. The numbers don't change. The numbers don't change. Pay attention more to structure, because the more you can compound your account, the more you can start taking those bigger lots. You can sit here and do this all day on M1 and taking profit after profit without worrying about what's going on a higher time frame. Let's look at structure again. So now we know that we are what? In an uptrend, right? We are in an uptrend. The market is trending up, right? Creating higher highs, higher low, breaking through higher highs, coming back, retesting, pushing higher. Then we start to what? Break structure. If we turn on the line chart, this was like the last higher high. We start to break structure and break through a trend line. Boom. I mean, you can try to catch this sell down. Where did it put when it started pushing back up? Where did it go? To this 50, barely hit it, and then started pushing down. But look, let me show you something. What do we know? We know that once you have bullish momentum, this is a movement now. This is not just candles. This is a bullish movement. One big bullish movement and an uptrend. It's trending up. What do we need in order to draw up our fib? We need to see some bearish downtrends. We got uptrend, higher highs, higher lows, higher highs, higher lows. Now it's starting to make it what? Lower lows, cut on a line chart. Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, double bottom, and didn't start pushing and started reversing. But why did it start reversing at that area? We know once we got bullish going up and we got bearish going back down, trend line was broke, structure started to get broken, right? Where do we take our trade? Inside the 50, 61.18 area. Boom. Trade would have been taken right there. Yes, you could have tried to catch the sell, which is still would have been in profit. You know, started pushing back up to the 50, take the sell, get out the market for another 3,000 pips. This is what I'm saying. You could take like a higher time frame doesn't matter anymore, really. You can just catch this one move, put a standard lot on there, 3,000 pips. Wherever you got in your account, even if I put a 0.001 on there, I can catch this move all day. For now on, I'm gonna just say standard lot, one standard lot, because I just want to keep the math easy. So $3,424, right? We caught that move, we out. Why? Because we had a bullish movement, which was higher highs, higher lows, higher highs, higher lows. Then we started to see lower high, lower low, lower high, lower lows, lower highs, lower lows, lower highs. So now we know that we can draw up a fib for the overall movement. So now we got uptrend, downtrend, look for what? A buy at the 50 to 61.18 area. And where do we get out the trade? Like I just said before I started the video, your entry would have been somewhere here. You can take it to the zero for $4,000 if you're using a standard line. Get out the market from using the 0.5. I didn't want to 0.5. That's still $2,000 that I just made easily. You guys are using top tier accounts, you can use a 0.5, or even if you use a 0.2, that's still that's a good pips. That's probably another little 1,000 or so. That's still good pips. Get out the market, or you can take it where 27 extension. So take the trade here. You can get out back at zero, or you can get out at the 27 extension. But I also want to show you, guys another confirmation that I discovered this past week. Where is it? I call it the HK, but the actual name is Heiken Ashi. Boom. All it does is show you the momentum of the market. Basically, it shows you which direction the market wants to trend. If I turn off my candlesticks, right? Look at this. It shows you the direction of where the market want to go. It's not a candlestick. It's basically the amount of money and the pressure from the bigger banks who are institutional. It shows you their movements and what is going on money-wise, basically. I could be wrong, but let's just look at it. This is just bearish movement. Yes, if you cut back on the candlesticks, you start to see, you know, bull candlesticks going back up for a retrace, but the overall market is showing bearish momentum. Like the momentum in it is going down. That's why you see red, 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 red. If you zoom out and just look at structure, you can see clear reds. So why even take a buy when it's showing me red? The momentum is red. The momentum is red, even on higher time frames. The momentum is red, right? This is on H4. If it's showing me all these reds, why am I even looking to take a buy? I need to see at least one candlestick white going the opposite way before I even want to take a buy. Don't try this on higher time frame, because sometimes the candlesticks look different than you see this. How you see how this long white Heiken Ashi went out all the way down here. Like, don't trust it. Sometimes you just want to check it for the momentum. Or if I'm already in a buy, say for instance, I enter right here, which is probably a pullback to the 50. I can stay in this until I start to see what? Red, which would be somewhere up in here. Look at all those pips we didn't caught. So say, for instance, we caught it right here, coming off the retracement. I can hold this trade now and wait till I see some bearish Heiken Ashi. Look, it started to turn red. So now I can get out. It's the same thing with M1. Same thing with M1. For a moment. So now we have structure and we have the Heiken Ashi. I call it the HK. I don't know why. I just say HK to make it easier. But the Heiken Ashi don't lie. So once I take this buy, right, I can take this buy, started turning, you know, white right here. And it's based off structure too. So I took the buy. Yes, it came back and gave me a double bottom, but my stop loss can be, you know, if I'm not comfortable, my stop loss can be right up under my entry. But we're looking for it to go, you know, bullish. It's still showing me white, still showing me white. You don't really see no big reds coming back. This is still just because when it's an uptrend, it got to what? Pushed up, come back, break through higher highs. Where did the market go back and retest the last higher high? Let's look at structure again. We just went over this, pushed up, created higher highs in this area, broke it. Where did it go? Came right back to the higher high. We just discussed this. Pushed up, pushed down. This is on the M1, so it looks a little crappy. Where did it go? Came back, broke the last higher high. So we just creating higher highs. So nothing is truly telling me to get out this market, right? And if you're looking at the HK or looking at Heiken Ashi, nothing is truly telling me to get out this market. So now we can hold trades longer. And even then, like usually with this Heiken Ashi, usually it's just show you straight, you know, white. They don't usually even give you some of these reds with these pullbacks. But we already know it's going to pull back because when you create structure, when you're creating higher highs and higher lows, you have to have some type of pullback. So you have to have at least a few of these pullback and continue, right? TP got smacked. So you could have held it right here and got out right there. Entry would have been down here again. Get out at the 0, or you could have got out at the 27 extension, right? Let's look at structure again. I'm going to come back on the candlestick and turn off HK or Heiken Ashi. That's the true name. I just call it HK. I don't know why. It just back in the day when I was trying to figure out a strategy, I was just calling it the HK when I was discussing this stuff with my cousin. So now we know we are now in a uptrend, right? Let's look at structure again. So start from where we started at. We went up, right? Let's just say we went up, we stopped right here and started getting what? Bearish momentum. Boom. And then we pushed up from this area, which was our 50, which was our 50 to 61, 50, 61. And what do we do? Break through where? This higher high. Now we're looking at it as a movement. Structure is the same, whether you're talking about candlesticks or movements. Now this area right here is broken, right? It pushed up, stopped right here. Where do we go? We came back, retest this higher high. And what do? Pushed up above. But when we broke through this higher high right here, did we truly break far from it? We stopped right here. Then we broke above it. If it wanted to continue to be a strong uptrend, it would have started pushing all the way up here. But look, it started floating, consolidating. Then we got another push up, and then look what happened. Structure pushed down, right? You seeing this? Let me zoom in, make sure you guys see this. We pushed up, created a higher high, came back, retested the higher high, right? Structure. pushed up. If it want to continue to be an uptrend, it was supposed to go pushing far above this last higher high, pushing above this higher high area, but it didn't. It stopped. It started consolidating right here. Even if you want to say it's a double top, low key, because this is just a fake out to get people to buy the market before they actually drop it. So it's just floating around. Then look what happened. It pushed down, right? Where did it go? Broke through this last higher high area. Broke through it. Pushed down. This is what I was talking about too when we got first started. What is going on here? It's breaking below. I'm gonna make it red. It's breaking below our higher high, which is an indicator that structure, this uptrend is becoming weak. So what can I be doing? Starting my fib. Got at the top. I'm looking for what? Some bullish momentum. I'm gonna delete this area, but this is our high area. I'm gonna delete it because I want to highlight our 50. All right, we're starting to get some bullish momentum, a little consolidating going on, but have we went to the 50? So we're not even taking a trade until we get back to the 50. This is where discipline comes in at. The 50 you got to be disciplined. You got to be disciplined. You got to be disciplined. We broke this higher high, even structure right here. Look at turn on the candlesticks. Structure this, you can consider this as a high area. What do? We broke it. And when we break it, we need what? Bullish going back up. Bullish came back up when it was going up. Did it hit? Nope, we stand there. You can either follow it, because now we starting to push up again. Did we get to our 50? You could have got in a trade right there and been in drawdown. That's why I say it really doesn't matter on smaller time frames. You could, because like just the market opened up right there, right? This was just a bullish push, right? So the market opened right here and just fell from right there, which is weird, because usually if it stopped right here, it's supposed to open up right here and then push up and then go down or whatever. But it opened up at the 50. So whether you use it there, you could have got in a trade there, or you could have just kept it on this original push up and just said, it never truly broke below. Let's look at structure. It never really truly broke below this lower low. So this is a lower low. It never truly broke below this lower low. It came back, retested it, but it never truly broke below it. So now we could have just kept it, you know, kept the fib, however you want to keep it. You could have took the entry here, or you could have kept the fib right there, because we never truly broke below this lower low. And if we would have broke below this lower low, then we would have been start dragging our fib all the way down to where we're breaking to. But since we never truly broke below this lower low, we can just keep it on this first one. This first push up, which is right here. We look for a pullback where? To our 50 area. So inside of here. And we can just sell it to where? Back to the 0, or we can sell it to the 27 extension. But this is why I say higher time frame sometimes doesn't matter, because when structure's starting to change on M1, it creates candlesticks on a higher time frame. So now we have a good entry. And usually we get out at the 0, you know, especially on higher time frames, or the 27 extension. But now since I am on an M1 and I've seen structure getting broken, it broke below this higher high, broke below this higher high area with this candlesticks, and down we got a good retracement to our 50 area. Now I can take the sell and flow with the higher time frame movements for thousands of pips. I don't really have to see what the higher time frame is giving me. If I cannot get greedy, I can just catch moves all day, take it at this 50 and get out somewhere down here. Why? Because now I know whatever is happening on the M1 is creating structure on a bigger time frame. Bigger time frames give you a sense of the direction, but what a lot of new students don't know is that the smaller time frames makes the higher time frame. So when I start to see all this, you know, weak uptrend start, they couldn't even push far past this, you know, higher high. It barely got past it, and then it's starting to break up under it. I'm looking for a good pullback. I can take it and sell it, or why be greedy? take it at the 50, get out of the 27 for, 1,000 pips. Another thing is, like I just explained to y'all a moments ago, turn on Heiken Ashi. Boom. Now, and even then, like, yes, we pulled back to the 50, right? If you still scared to take the trade, and like who like some like how it's gonna push from the 50? We don't know. We gotta risk it, but we know this is a good amount of pullback. I don't want to sell the market when it's already fallen. I want to see some type of pullback, even if it was right here or right here. I want to see some type of pullback. So that way, when I take this entry here, my stop loss can be right above. And now I'm not going to be in drawdown. If I was to take a sell off right here because we broke and took a sell, I'm still going to be in drawdown for 1,000 pips. I'd rather wait and try to sell it here and be in drawdown for $9 or a couple pips, and stop loss can be right here. Now I'm not risking a lot because why? I waited on a pullback. But look, when I got in the sell, if you are scared to take the trade at the 50 and you don't think it's going to reverse, now we have another confirmation, which is the HK or Heiken Ashi. So if I take a sell on its first red, boom, first red closed. Now I can hold this, right? And that's why I say sometimes you need to see at least at least two candlesticks before actually getting out, right? So now I can hold this. Why? Because this is showing me the momentum of the overall trend. I can hold it. Now we're starting to see a white candlestick. Now I'm like, okay, damn, let me think about getting out. Now I see two candlesticks closed. I'm getting out. I'm out the market. Go back on the candlesticks, especially starting to see, momentum starting to break. I can get out the market. I hope you guys are seeing this. This Heiken Ashi would help you flow with the market, help you flow. It helps. Now I know we are totally in a downtrend, right? Boom, started from all the way up here, push down, created a lower low, pushed up, created a lower high, break down, lower low, lower high, lower low, lower high. Boom. So now we have lower high. This is a downtrend. We need to see bullish trend going up, right? And when we got our bullish and we looking to take a sell in here. And when you messing around with these movements, right? So this is downtrend movement. We're not really focused on like a couple candlesticks anymore. This is now a lower low, lower high, lower low, lower high, lower low, starting to break above this last lower low. And it didn't pull back to the 50. So even then, like people say, bro, we broke through the lower low right here. Yeah, we broke through the lower low. So if you didn't understand like it being just one movement and we need to see the the bullish. So let me just go through it because I know I get this question a lot. I'm gonna turn off HK for now. So people say, yeah, we broke through the lower low, right? Broke through the lower low. We broke through the lower low, we should get a pullback. Did the market give us a pullback? We can't force the market to give us something that we want, right? We just react. So it broke through the lower low, so we got bullish. Oh, shoot. I need the fit. We got bullish. Placing on what? We need to see what? Bearish pressure, right? We got bearish pressure right there with that downtrend or with that down candlestick. Did we come back to here? No. Did we touch the 50 or the 61.8 area? No. What do we do? Kept pushing up, right? So now we stop right here. So now, and we broke through that last higher high, turn on the candlesticks. This was the higher high. We broke through it. And look at structure. It came back and touched it later on, right? Boom. But even then, like, forget the structure. Did we come back to our 50 area? No, we didn't. What do we do? Kept pushing higher. So we don't take a trade until we get a push back at our 50. Did it come back to our area? No. Like you should know when it's starting to create an uptrend without pulling back to this 50, we should already be knowing that this is just a pullback for this overall downtrend. This was it. It was a down, up, broke through. Once it broke through this lower low, now I know that this is going to turn into a movement of just lower lows and lower highs. And when we got a downtrend movement, what do we know? We have to see what? Bullish. So we can start from the top and start from the bottom. When we start to see what? Bullish. So now we got down. There's trends within the trends. I was teaching somebody that the other week. There's trends within trends. I'm showing you trends within a trend on smaller time frames. It's still the same stuff happening on bigger time frames. A lot of people get lost in the sauce on bigger time frames because they don't understand trends within the trends. So now we know that this is just one leg down. On H1, this is probably a total of an hour. So that hour worth of candlesticks is probably just a bearish candle. Then we start to get what? Bullish momentum, retracing, right? You could have took it here at the 50, been in drawdown, however much you're willing to lose, or you could have just waited on structure. We broke through. This was like one of the last lower lows. When we break through a lower low, we go back and retest lower lows. Usually the market goes back and retests lower lows. So your entry could have been up here, or like I tell everybody else, wait on structure to get broken. Wait on structure to get broken. We already know that's making higher highs and higher lows, higher highs, higher lows. I shouldn't truly be looking to take a sell until I start seeing either a double top or start to see this last higher high. Let's look at this. Remember, we already got this bear. We are looking to take a sell at the 50. But instead of just getting in at the 50, we can start looking for structure to change. Or like I say, draw up a trend line. This trend line is not broken. This trend line is not broken. Just creating higher highs. Right? Turning candles higher high. Pushed above. We already know it's going to go back up and come back to retest. Right? That's why I came back and retest. These two candlesticks coming down and up. That's just a retest. Came back again for a little small retest to push higher. It stopped where? Right here. Went back up. Push higher. It's just creating an uptrend. Don't sell the market when it's already an uptrend. Wait for structure to get broke. Pull out a trend line. Trend lines are your friend too. Where did the trend line start to get break? We already looking for a sell in this area. Why? Because it's in our 50 mark. Boom. Our 50 mark was inside of here. So now we just waiting on structure to start changing, right? So now we pushed up. And I want you to see something. We pushed up and we already in an uptrend. It's supposed to come all the way back here to retest, but it stopped right here. Make this blue again. It stopped right there. Push higher. This could have been like a lower low type. I mean higher low. It pushed up, but stopped right here. Now it's starting to what? Break below some lower lows, right? Came back up, right? And then we truly see, and this is like it can be consolidation. Just be careful. I'm pretty sure it gave us a wick. Gave us wicks. Now we are breaking structure. Look at structure. These lower lows are starting to get broken. Even our trend line broke. Boom. And where did it stop? Yes, it stopped at our last higher high, which means it could possibly push off of here and continue to go in its uptrend. But this trend line was broken. Started making lower lows. So now when this happened, what do? We know that we was already looking to sell from here, right? because it was just a downtrend movement. Now we can try to catch this down, but we know that this was downtrend movement. So we could have, you know, placed it here, put it on here. And this is something that we got to be careful of too. That's why sometimes I put my stop loss right above, you know, this last higher high or lower high in this situation. We're looking to take a trade at the 50, but turn on the HK. Right. This is confluence, bro. The market is never going to be so simple. Don't get me wrong. I try to break it down as simple as I could, but nobody's truly right? Look at this. It's pushing, it's showing white. I still wouldn't even really want to be taking a sell until I start seeing some bearish candles and waiting for it to at least turn red. So when I start to see this bearish candle, you see how it's white right here on HK, but we starting to see a bearish candle. That's an indicator for me. Sometimes I jump the gun, and once that white HK closed, but with the bearish candle, I sometimes just take the sell and just fall right in the money. Fall right in the money. Like I say, sometimes you got to get out at the 0. So I would have been looking to take a sell from somewhere in this 50 area down, try to take it back to the 0. Or with me saying this uptrend structure starting to break, we're starting to push above, you know, the 66. I could have said this is just a retest, and I'm pretty sure, bro. Like, that's why I say, bro, like this higher time frame doesn't even matter anymore. You could have did it like this, however you want to do it. You could have been looking for a buy inside of here. This is why you can't get greedy, because if you did catch the sell, overall sell, you would have overall caught the sell somewhere in this area on this pullback and was looking for it to go to the 27 extension. Boom. Like you that's why sometimes after I get a good entry, say for instance, I did take the sell here. Soon as the market started, as soon as I started to see big movements, I will put my break evens on there. This is good for, you know, you guys with top tier accounts. My break even is going to be right there after I see a big push off of wherever I took my entry. My break even is going to be right there below it. Get out. Like, so if it did start pushing back up, it would take me out before it actually, you know, hit my entry. And like, this is just a strategy for M1. You won't be right every single time. But now we have so many confluence and we don't have to truly worry about higher time frames. We could just trade. Look for market structure to happen on M1. Now, like say HK showing white. Now it's creating, is pushing from here. We put it up here. This is where it started to give me bearish momentum. Did we get to the 50? No. Let it go. Started creating uptrend. Stop right here. Did we get to the 50? No. Let it go. Or you can try to, don't get me wrong, you can try to like catch the trend. Pushed up here. Did it get to the 50? No. It started pushing a little bit higher. Stop right here, start pushing down. Did we get to the 50? No. But did we ever break through this higher high? No, it's just moving around right here. So now what? This lower low starts to break, right? Starts to break. And that's another thing. When you draw the fib, if it pushed up and already created, because we know in structure it pushed up and it came down, then we got a push breaking above this higher high. I will want to start my fib sometimes, and it doesn't happen all the time. I want to start my fib where we got that big push, because right here is just really the lower low in its downtrend. So lower low came down, created a lower low, and then it pushed up. And this could have been a lower high, but it started breaking. Where did it break? Let's look at it. This is another thing. When you practice and backtest this for yourself, you will see, because this is still, this mark right here could have still been just a lower high. Like this is the lower high. This mark could have been still a lower high. It could have just continue to break down, like push below this lower low from this area. But what candlestick broke through is making this a higher high. These candlesticks right here. So it would have been this one right here, this bullish going up. And then it started breaking. Or you could have put it on the candlestick, the bottom of the candlestick that broke it. So tone, long chart. So right here, it was this candle right here that broke through. So right here was, let's mark it. So right here, what candlestick was it that broke through? It was this one that broke through it. So you could have started your bull going up from there. All right. I forgot to show you guys that. Now, when you place it up here, did we get to the 50? No. Still didn't get to the 50. Put it right here. Did we get to the 50? No. We get to the 50? No. Get to the 50? No. Get to the 50? No. Put it up here. Did we get to the 50? No. But it started creating a lower low, lower high, break through this lower low. So now I know this trend is starting to change. And now I know we got a bullish trend. Now we're just looking for a bearish trend. And structures sometimes do get ugly, especially when news and stuff hit. But look, where did it go? To our 50 area. Boom. Take a buy. Be confident in your buy. You also have on the HK. So when this is falling, nothing is telling me to buy. Even then, right, if I would have took a buy right here when it's starting to show me, took this buy right here and it's starting to show me white. Could have got in like right here. Stop loss could have been right up below it. Could have been right below the 61. Took the trade right here because it hit our 50. Came back, retraced. You still $14 if you use it 0.10. You're still making money. Flowing to profit. This is where I say sometimes take the your first TP should be at the 0. We already knew that this was going to happen. So look, when this started pulling back, don't get scared. Why? Because where did we just break? Stay with structure. We just broke through what area? This area. So we know what, in order for us to stay in the uptrend, it broke up. This candle was just probably news, quick news. But then we just broke through this area, right? Where do we got to get to retest? Boom. What do we do? Boom. Broke through. What do we do? Break. Look at structure again. Stay with structure. We broke through here, created a new higher high, came back, retested, broke through this higher high, created a new higher high. Did we come back and retest it, or do we break up under it? This is the last higher high. What do? We came back and broke below it. So that's a what? Even if I am in this buy, I'm now like, dang, structure is starting to change, right? We see it. We all on one accord. Let's mark it out. Sometimes highlight the area. This area was broken, right? Boom. Structure stayed same, came back, just retest the area. Boom. Now we know what? This was our new higher high, right? It should have pushed. Boom. Came back, retest. It's supposed to push higher, right? To come back and retest here. But look what we did. We pushed all the way down here, breaking below our last higher high. So what does that tell us? That this uptrend is now becoming weak. So what can we start doing? Pulling out our fibs. because now we broke below it. Now I'm just looking for a good amount pullback. I'm looking for a good pullback. You can. I'm gonna turn off HK right for now. Because I want you guys to see these candlesticks and not get confused. So now we started to break below this higher high area, right? We started to push all the way down, right? So we can take it from top. And now we start to get bullish momentum where? Right here, the bottom of here. Got a break below. Now we're starting to get a bullish candlestick, which is here, bullish, bullish, bullish. Where do we take our trade? And this is all off M1 structure. We have not even focused. I don't even know what H1 or H4 or weekly or monthly. I don't have to really, you will mess yourself up. I mess myself up, especially Monday, trying to force the market to go on H4. I kept trying to force it to go to the 50. That bullish movement that we seen happen, I was looking for that to happen on Monday, Tuesday, and Wednesday. Like, we can't force stuff to happen on higher time frame. Just stay in structure. And for me now, I only trade off of M1. Don't get me wrong, I would check higher time frames to see where I'm at, because structure don't change. But like structure on M1 is concrete, low key. Pushed up, we got a break of the higher high, right? Broke through the higher high. Now I'm looking for a pullback to my 50. I got bearish, I got some bull, and now I can, take the sell, get out at the 27. But why? When we already start to see structure starting to get broken, we can just let this flow. And this is why I use the Heiken Ashi sometimes, because now I can just flow. Look at all this red momentum. Red momentum. We know we're gonna get some pullback, so be expecting a little bit of white. When you start to see 2 or 3 whites, get out. Or like I say, I take a sell right here. Make it another color. Say for instance, I take the sell here at blue. My stop loss can be as soon as I start seeing it flow, I pull my stops right in front of it. So that way I'm not losing nothing. I rather not lose nothing than to, as it start to flow, I rather just put my stops in front, bro. Because even if it starts to pull, I don't want to be in drawdown. I hate drawdown. I don't like it. So once I take this at the buy and I started pushing my direction, my stops are going in front. Yeah, some people say, oh, you got to give it some room. I'm not giving it room. If I'm looking at structure on an M1 is concrete, bro. It comes back to the 27. And usually when it comes back to that 27, it's supposed to explode down, which is what it did. Came back to that 27 area and it should start going. And now we are just flowing with higher time frame. We don't know what exactly the higher time frames is showing us. All these candlesticks above, and I feel like the structure that I was trying to show y'all right here, I feel like all this stuff right here is just a powerful long wick or something. I don't even know, but because it never truly pulled back to the 50. So that momentum was just pushing it, like right here when it started to break above, it never truly pulled back to the 50. So now I just think that all this is just, can be a wick or something, because structure start to act up a little bit. But when I start to see a clear break below the higher high, I'm taking it still at this 50. And now I'm just flowing. Now I got my HK or Heiken Ashi on and I'm flowing. So entry is at the blue. Now I'm just flowing in profit. Challenge, top tier challenge is starting to, get past, right? 5,000 pips. Starting to see white, strong whites. I'm getting out 4,000 pips. Get out. Or you can just say, we are still up under the 11. I use the 11 EMA, and this is also the 66 key uses this. You can just let it flow then. Say, so many confirmations, bro. Like you can just say, let it flow until you start to see break a structure. Because even then, let me delete some of this, clear it up. Structure is still maintaining. I mean, don't get greedy. You should get out when it started giving you white. But for those who are, savages and know market structure and not new to this, we know that this market is just trending. It's creating lower lows and breaking through lower lows, right? It's creating new lower lows and breaking through lower lows, lower high, lower low. We are creating, so you can just be floating in this sell, lower low, went back up for a long wick to what? Retest this lower low. What did it do afterward? Broke through this lower low. What did it do? Retest that lower low. What did it do? Come down and create a new lower low. Just mark it out. So you could have just stayed in the sell. Really, even nothing is truly telling us to get out to sell. Push back up. What did it do? Break through this lower low. And then look, this is where I'm like, okay, now we starting to break back above this lower low, right? Let me turn off HK now, because now we're starting to see white. We're starting to see a break below, a break above this last lower low, right? So now that's an indicator for me that this downtrend is now becoming weak. We start to see white on the HK, right? Structure. We already know that this is a complete downtrend. You could try to mark out the, connected. I don't really care about connecting because I'm more market structure. I don't need a trend line unless I really have to. But look, market structure. Market start to break above this lower low. Start right here, put it on, this first bearish going down. I'm gonna delete this. Just remember, this was our last lower low that's starting to get broken. None of these broke through our lower lows. We created lower lows, came back, retested lower low, broke through the lower low, retest lower low, created a new lower low, came back, didn't even go back to truly retest this lower low, but it just broke through this lower low. But now look, this lower low got broken with these two candlesticks, right? Started showing me bear. And look, pay attention, practice. Got bullish. Some people like to put, on the first candle, even on the first candle. Did we come back to the 50? No. What happened? It continued to push up. So if it didn't hit my 50, keep pushing up. We already know now and it's breaking through trend and starting to push off from this lower low. So now we're just waiting on a good pullback, right? When it pushed down right here, did we get to the 50? No. So that's not a good buy. It's not ready yet. Trust me, the market wants you to do this. This is where a lot of traders lose their money because they see it going up and they look for a buy whole time. It's going to pull back because it has to pull back. It don't have to, but usually it does. Now we took it from here because it didn't come to the 50 from off this bearish. Took it up here. Now it's starting to push down again. Did it get to the 50? Unless I highlight the 50. This is where patience come in at. And it's a skill. You have to practice it over and over to get better at it. Practice. Now, when we placed the fib up here, it didn't even get to the 50. Place the fib right here, it didn't get to the 50. Now it's showing me again. It pushed down. It didn't get to the 50. It came back up, gave me a double top, right? So I'm still like, even if I was to say, okay, do I put it right here? Why would I put it right here? Because we never broke above this last higher high, basically. So I'm still staying on here. I'm not moving my fib. It didn't break above. So if it would have broke above and or even gave me a wick all the way up here, then yeah. But it never did anything. It didn't come back and retest. Structure-wise, it came back and looking like it's giving me a double top. But I'm still looking for a 50 trade at this 50. This is where patience come in. Didn't give me a 50 here, didn't give me a 50 here. Came up, came down, but then it started pushing back up. So I'm just like, okay, it's just going to keep pushing up. I'm going to just keep dragging my fib. But then I start seeing this bearish. I'm like, okay, let me stay on this last one because it never broke above it. Now let me look for a trade inside my 50. And I ain't going to lie, seeing this gap right here, I would have said, shoot, I'm taking my risk. As soon as it coming here to this 50, I mean, don't get me wrong, they came close, either came back and touched it right here. So whether you want, that's this 50, like I said, this 50 mark has to get touched. So yeah, it didn't hit it right here, and it didn't hit it right here, but it came back and hit it right here. And some people have said, you know, why you want to use that first bullish candlestick going up right here? It doesn't really matter. Look at it different. That's not even a pip. It still doesn't matter. It's still so close. So you could have really took the buy right here, or you could have waited on it to come back here. Like the market is never going to be the same every single time. If it was, we'd all be millionaires. But I'm willing to take my risks right here, get in, you know, because structure was already starting to change. I think this downtrend is becoming weak. I can get in right here and grab all these pips and get out at the 27 extension. Like I say, bro, a standard lot, that's $2,000. A 0.5, that's half of that $2,000, which is another $1,000. You just racking up money at this point. Take it, turn on the HK. You in a buy, turn on the HK or turn on Heiken Ashi. I call it the HK. Turn on the Heiken Ashi. Turn the candlesticks off. What is going on? Showing me. Nothing is telling me to sell. Nothing is telling me to sell. I'm in a trade right here. It's going bull. Nothing is showing. We already expect. It didn't really give me two reds, but we already know it's going to pull back at some point. But look at structure. You can start marking out. Look at the line chart. You can start marking out these higher highs. Boom, higher high. Higher high. Right? Structure is maintaining. Nothing is truly telling me to sell. Higher high. Higher high. Now it's starting to what? Break below this higher high, right? So now I can start, and it's starting to turn red. Now I can get out. Got the entry right here. It's just creating higher highs and higher lows. Now it's starting to break below, you know, this last higher high, and its line chart is black. Get out. 4,000 pips. Get out. I'm not teaching you how to be a scalper or whatnot. I'm just showing you that higher time frame sometimes is confusing. You don't really have to truly focus, lock in on it. You don't have to try to figure out what's going to happen. You can catch a good amount of pips just looking off structure on this M1. I want everybody to see that. Now we know structure started to change right here, right? Came up, gave me double high, started break below this lower low. Where was the last big push from down here? It pushed up. Let's look at structure. Let's just say here, came down, and it's an area, because now we know this is the uptrend is making higher highs and higher lows. So now we know that this is an area, right? Pushed up, came down. Now what? We breaking through. Stopped up here. Structure started to change. Now we're starting to pull back. Here, boom. And this is, I think this is news, because yeah, news start to happen on this day, I think, because look at this big gap. So what candlestick that broke above all this area, this top? What candlestick was it? It was this candlestick that broke. Start from right here, put it up. Look at structure again. I want you guys to see this. Hold on. Look at structure. So I'm gonna turn the HK off again. This is just confirmation. Sometimes you don't really need it, or unless you want to just take that risky. And some people may just do something stupid and say, "Oh, when it turns red, I'm just take it," or whenever it turns white, I'm just take it. So now this candlestick right here is that bullish momentum that broke through. So I'm starting my fib from there. I'm not starting it from down here, because this could have been just a lower high, but when it broke through this movement, it was basically this gap candlestick that broke. So I'm using it from there. And it also broke through this higher high. So starting from there, started showing me bearish momentum, right? We got bull, we got bearish. Did it get to the 50? No. So we don't take the trade. Stop right here. Did we get to the 50? No. So we don't take a trade. Let it flow. Guy right here, did it come down and give me to the 50? You see what I'm doing? I'm just moving it up and back and forth. No. Pushed up right here. Did we get to the 50? Did we get to the 50? It's pushing down. And then look, no. It start what? Pushing back up, right? And you see it broke above, gave me a wick above. So what do? Put it on the next wick. Boom. When it's pushing down, do we get to the 50? Or I mean, don't get me wrong, it came close to the 50. And this is another thing. You could have kept it right here. Why? Because usually, like I say down here, you have, in order for this to continue, this is a double top again. In order for me to move this fib up, it would have to give me a candlestick and close above, right? When it give you a wick above, that's a fake out. It didn't really break. Look at structure. Even on structure, it didn't even break above this last high. Sometimes wicks can do that, bro. So just be careful. If you already got it right here, we need a candlestick like right here. Let's go back. Let's go back. Let's go back. So when we started on this wick right here, right? Push down. We didn't get to the 50. And then we have what? Candlestick close above. Gave me a bearish candlestick to close above. Look at structure. It pushed above, breaking through this higher high. Boom. So now I know I can place it up there, right? Boom. What did it do? It came back and retested that higher high, pushed off of it. Look what happened when we pushed. Did we get to the 50 from here? No. What happened? It broke above again, closed above again. A lot of these candles, these two are bullish, so I know I can't even use those, but I'm riding, just waiting. Boom. Like, right, did we get to, look, what do we do? Just came back and retested the higher high. Did we get to the 50? No, so I'm still riding it. Look, pushed above again and closed above. Gave me a bearish candlestick right here. Did we get to the 50? No, it's just pushing back down. But for us, we start to see structure changing. This higher high is now what? Becoming weak. Usually, don't get me wrong, usually when a market comes back and closed below this lower low, I mean this higher high, when the market comes back and close below this last higher high, what do we usually can pull out a fib and look for the sell at the 50. But overall, we know that we haven't even touched the 50 from this uptrend. We just broke through this higher high area down here. So we still know that we are in an uptrend, right? We just broke through this area. If anything, we know we got to get a pullback at some time to one of our 50 marks. We just was patient. We just riding. Then we start to see another confirmation with candlestick structure happening, not candlestick, but the line chart structure happening, breaking the below. We never truly look. We broke above this higher high. We didn't come back below. We broke above this higher high right here. We didn't come back below and close up under it. We just came back, retested. And what do? Push above this higher high. What do? Came back, retested it. Then what do? Broke above this higher high. And what do? We came all the way back, closing below it. So now I know that this uptrend is starting to become weak. And when it started to do that, usually we can pull out our fib and wait for the pullback to the 50. But in this case, it gave us just a double top. It came back, gave us a double top. And then off this double top, it pushed what? Breaking below this last lower low. So now we have a downtrend. And we know whenever we have bullish and bearish, right? We can look for a trade where at our 50. Let me see. And don't get me wrong, this 50 mark is already strong, so that's probably why I didn't get all the way back. Let me delete some of this stuff. Even with this candlestick, this funky, this stuff right here happening, like it was like Put it on there, never hit the 50. Put it right here. Never hit the 50. Could have put it up here. Never hit the 50. I mean, don't get me wrong, it came close, but in order for it to stay in structure, all it was doing was coming back to retest what structure. The market would never be always completely right. And really it depends on where you want to start your fib. I know I'm not starting it from down here because this candlestick is not it. I want to start it from somewhere where it just broke structure at, which would have been this candlestick, or you could have used it right there, which is looking more valid. But even then, if you would have placed it right here, when it started pushing down, we didn't get to the 50, right? No. Push it up. Push it up here. Do we get to the 50 right here? From this push? No. Start right here. When it's pushing down right here, do we get to the 50? No. Push it up. When we start right here, do we come back and get inside this 50 mark? When we started right here and it's starting to push down from here, do we get in the 50 mark? No. Push back, ready to double high. Like I say, I'm just going to stay on this one because it truly never gave me a candlestick to close above. I know structure is starting to change. It's starting to break through this lower low. Now I can look for a buy in this area. But don't get me wrong, we probably would have all missed it because of this craziness that's going. Look at this huge gap that's in there. So whether I would have started at least on this one or that one. Most likely I would have started on this one. It would have came just a couple pips away from my 50 mark. So I probably would have missed this trade. But for those who did want to use this one, you could have used it and caught it, even when you placed it right there, it never got to the 50, never got to the 50. So you're just moving it up. Then it started retrace where to our 50 mark, could have got in this buy and took off. Or indicator. This is the only indicator I would really truly look at. Look at this downtrend, 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 downtrend. Nothing in this downtrend, nothing is truly telling me to buy. Now we're starting to break through this lower low. So now we break it through the lower low. Now we're starting to get a push above and give me white. So this is another confirmation. You see how I turn white? Boom. Could have took it after this white close. Look at the candlestick breaking above all this, engulfing all of this. Could have took it right here and just flow with the market, flow with the HK if you have to. Starting to show me red, get out. Boom. Get them pips. Dip. Pips and dip, baby. But last week, that's why, and this, don't get me wrong, bro. Structure is great when a market is flowing normal. US30 this week and every other pair, all the pairs are going crazy because it's the end of the month. Most companies, most banks, most everybody around the world has to give a end of the year report. And with COVID happening, a lot of traders get off the market. They don't even trade in December because structure is not maintaining. You start to get wicks, you start to get spikes, you start to see craziness happen on US30. That's why US30 been going up and down and up and down, because there's so much noise, there's so much news, there's so much reports are getting processed. It's even holidays. You got Thanksgiving, Christmas, New Year's, all these holidays that are going to come up. Banks going to be closing. There's going to be spikes with bank companies giving monthly reports. Like, just be careful, bro. I wouldn't even, a lot of traders stop trading around this time for a reason. They don't just, stop trading because it is end of the year. They stop trading for a reason. A lot of them say, they want to spend time with their family. Yeah, that's true. But like, a lot of them stop trading for a reason because end of the year reports and stuff, it caused spikes, it caused wicks, it caused a lot of them to lose. Usually a lot of people start to lose. Even Q, I think, said he lose more, during this time. Why? Because of stuff like this. Yes, it's in a 50. You could take it, but just when you take the sell and it's 50, you'd be so nervous. And especially seeing it spike all the way back up. When it started to spike back up here, you'd be like, everybody else would have been like, oh, shoot, let me get out. And when you get out, then look, drop. Usually it don't happen. Usually it come back to our 50 mark and it falls. When the structure is perfect and it's like maintaining and flowing, it's not flowing. But what I wanted to show y'all is just structure. I wanted to show y'all structure pullbacks. 50. Hold on, started from the bottom because it's just an uptrend. We got our bull. It's just making higher highs, higher lows, higher highs. This is that triangle, whatever pattern. I don't even know patterns really. I say it all the time, but like this is that little triangle, whatever, pushed all the way up, just creating higher highs and higher lows in structure. Now we're starting to see bearish momentum. Why? Because we start to break below this higher high. This was the last higher high area. What do we do? Break below it, right? And when we broke below it, where do we go? We didn't even really truly get a pullback to go to the 50 to come back. But like when we had bearish, we have bullish, bearish. Where do we take our trades? Somewhere inside this area. And like I said, this is why a lot of traders don't trade around this time, because you get craziness, stuff like this. So you would have took the buy and it would have been going up and down, consolidating, going up. You could have got out at the 0 or close to the 27 mark for 6,000 pips, get out. But look, it's just consolidating, consolidating, consolidating. And then look, start taking off. So you would have been in the buy. You would have been in this buy, catching this wholesale. And this is when look at this. This is ugly. But all I want to show you guys is structure. Even when news happen, right? Structure. People say, bro, do you trade news or do you pay attention to news? I don't really pay attention to news. Structure, bro. News creates structure too, bro. Don't get scared of news. Started breaking above all this higher high, right? First push down was where? Right here. Started pushing down. And this is news at that 2 o'clock last week on US30. News is right here. Did we get to the 50? Well, on this first push? No. We started what? Breaking higher. Stop right here. Did we get to the 50? No. Stopped up here. Did we get to the 50? Adjust. This is inside our 50 mark. Did we get to our 50? Boom. Yes. All because we was patient. And this is even in the midst of news. Change the color. That looks ugly. Make it orange. So took the trade right there, or you can turn on HK, because I'm pretty sure HK was showing this as red. I'm not taking the buy when the Heiken Ashi is giving me red, right? That's stupid. Look. Yes, it's inside my 50, but even though it's inside my 50, what is this Heiken Ashi showing me? Red momentum. It's not ready yet. When it started showing me bull, and the opposites, usually I say, like, you see how it's a bullish candle, but it's a red momentum. That's, to me, right there. Usually I would just take it after it closed. So as soon as it closed, I'm taking it. So my entry would have been right here. Then now look, it's starting to float and white. Now I'm just floating in profit. Like I said, first TP can be where? At the 0, 16,000 pips on a 1 minute entry off a 1 minute structure. You don't have to pay attention to higher time frames. You can, don't get me wrong. Disclaimer, because I don't want you guys thinking, forget about the higher time frames. But all I did was wait on structure. When it broke above all this area, it never truly pulled back. So what I'm looking for a good amount pullback to my 50 or 61. And now I have an indicator that I use, the first one, I used to try to use it back in the day, but I didn't understand structure first. I want you guys to understand structure first and use indicator as a confirmation. But now I can take this buy inside my 50 zone, even after this, white candlestick. This, once it turned white right here, I could have took it right afterward and still drawdown would have been nothing. Now I can get in there and get out. Entry right here. Boom. It starts showing me red. Get out. That's still 9,000 pips. A lot of you guys have top tier accounts with $100,000 in there or $200,000. You can use a 0.5. A 0.5 right here is about $7,000. If I have a $2,000 account, I can put at least a 0.5 on there. Or I'm not telling you what to put. Disclaimer, 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 disclaimer. Trade at your own risk. I don't know. I don't care or I'm not telling you what to trade. I'm just saying what I would do. This is what I do. I would put a 0.5 or a 0.2 at the least. I have $200,000, but I'm also, my stop loss is still going to be right here. But as soon as it start pushing in profit, like I say, I break even. Usually I put it right above it. I don't put it all the way above it. I don't put it all the way up here because you see what happened. It pulled back and took me out and didn't push more. But I put it just above, my entry. So that way, when I do take that, take that entry, right, and I start to see it flow first, I don't take the entries, I don't just take the entry and then put it exactly right. I need to see it flow first. Let it flow. See the push off. Once it's pushing all the way up here, now I'm putting it right here. Now I'm putting it right here because it shouldn't even come all the way back down here. And even on some stuff like this usually don't even happen. This was just news. Remember, this is when news happened at that 2 o'clock. I forget what date. It would usually push from here and go to the 27. You don't get no little consolidation, little pullbacks, right? But I mean, still look at market structure. I see why it pulled back. Why? Because it just broke through these higher highs. Higher high, came down, higher high, just that triangle, broke through this higher high. Where do we got to get to? Back to these higher highs to retest. So even if I took this buy, I already knew it should have pulled back to this area anyway if it wanted to continue to be an uptrend. And then look, you just riding the wave at this point. Entries right here, gone. I hope you guys are seeing this. I want you guys to get this because once you got it, it's life changing. Look, this is the candlestick to turn white. This is that bullish momentum that we needed. Put it up here. You could have got in right here for the second entry. Now we know that this is the overall uptrend because it broke through this higher highs. We know what it has to come back to retest these higher highs. So when it came back to retest, if you're a confident trader, you took another entry inside our area. It's at our 50 or 61 night. Bull, bear, trade. And this is why I let the market flow. So my entry would have been somewhere in here. My stop loss still would have been somewhere. My stop loss would have been somewhere still below here, like below this last higher high. Not in front yet, even though it's pushing, but I want to see at least this higher high get broken before I start to push my stop loss in front. Because if I would have seen it push right here, then one could have went right here and continued and been. It already broke through a lower low, created a lower high, came down, created a lower low, but I entered on that lower low. It could have went down, like it did, retest and then continue to fall and break through this lower low. It didn't come down. It came down, retest this lower low. All these wicks and this candlestick right here back and forth. That's just a retest. That's not a break. If this one right here would have closed after we broke up under, then I would have been getting out, the entry period. But it was just a pullback above, retest. And then when I start to see at least this higher high right here get broken, now and I can, move my break even right here, boom. And then when I start seeing it, break through this higher high, I can even move it probably a little higher. Even though I know it has to come back and retest this area. It tried to right here, but now news is just so strong that it's just pushing it. So my entry, I would have been in just pips. We was already in an entry down here too. Don't stack too much. But when Q talk about stacking, when Q talk about not stacking, when he talk about scaling in, this is a scaling in. We was already in an entry right here. We waited on structure, pushed up, gave us bearish momentum. This is a scaling. That's a good scaling. Take another buy. Stop loss could have been right below it. Like I say, right below this last higher high. Turn on the line charts. Right below this last. Let me turn this. Could have been right below, you know, this higher high area. Right? So entry would have been at this first orange. Stop loss would have been below this last higher high. Because we just broke through this higher high. And for us to stay in the uptrend, it has to come back and retest this higher high, which would have been our second entry. Stops would have been right here below, because it doesn't have to do, you know, what we wanted to do. But stops are right here. I don't know how many pips that is, but depending on what you had in your account or how much you want to lose, that should determine. Stop loss is not a stop loss is not a spot that's perfect of where the market's not going to hit. A stop loss is based off your entry, your lot size, and how much you have in your account or how much you're willing to lose. If I only want to lose $100, my stop loss will have to be super closer than this. But if I have, like I say, if I have a couple thousands in my account and I'm willing to lose at least 500, and I just want to use 1 point, you know, just a point 1, my stop loss is down here for $516, which was never hit. If you know, I want to use a standard lot, say for instance, I'm Q or whoever you want to be, professional trader. Now I don't want to lose more than $2,000. Now my stop loss is somewhere right there because I want to use a standard lot. It depends on how much you have in your account. It depends on how much you're willing to lose. Stop loss is not a particular area. It's based off how much money you got and how much are you willing to lose. But structure is maintaining, broke above this higher highs, came back and retest. And look, it's flowing. Turn on the Heiken Ashi. Flow. Turn the candlesticks off. It's flowing. Nothing is telling me to sell. Nothing is telling me to get out. Nothing is telling me to get out to win. Somewhere around here. And even then, we already know that we just broke above this higher high. We are just going back to what retested. We broke above this higher high. So once it's coming back showing me red, it's just coming back to retest this higher high, breaking through this higher high, right? This is when you practice and become a confident trader. We broke through this higher high, right? Broke through it. What do we do? Come back and retest. Retest. This is not, even though it's giving me red on HK, it's not truly telling me to sell yet. Breaking through this higher high. But look, it didn't really truly break hard. It stopped. Came back, retest, pushed back up, stopped. So now I know this uptrend is starting to become weak. Why? Because we got 2 stops. It's starting to become weak. It couldn't really break above this higher high. Stopped right there, stopped right there. I'm pretty sure this is the candlestick that broke. Boom. So this area, this higher high right here was broken. This candle, we'll put it right here to get to the 50 no. Put it up here to get to the 50 no. Put it up here to get to the 50. Yes. Another entry. This is how you win. This is how you scale in. Boom. Push. Then get to the 50 here. 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 Then now what is it doing? Getting to my 50 mark. Take a buy. Boom. Now I'm going to start to break above this higher high. Stops can be right there. Or why be greedy? Take profit once you get back to that. 15,000 pips. Take profit. This is a strategy. This is just based off of M1 structure. We have not tried to look at higher time frames and try to predict anything of what's going on. We literally are looking on M1 structure and it's entering off of what we know. This candlestick is what broke this downtrend. It broke structure. This was the higher high, broke, start the fib right there. When we got up here, put it up here. Did it get to the 50? No, let it flow. And also, look, we are already in the buy. We wanted to push like that. We was already in the buy from down here when we scaled in. Let it flow. Start to see some true bearish. Now we got bull. We got bear. Where do we take a trade? 50. Took the trade. We know we good. Why? Because now it's showing white on the HK. HK is pushing. It's not even though you see these black candlesticks, HK is still showing me white. Trust it. Still pushing up. Even then, I could have been done right here. That's 10,000 pips. Whoever has a 100K account with top tier, it's done. $10,000, right? That's 10% of that 100K. You're done. Whoever got the 200K, $15,000, take it, get out. 19,000, get out. Starting to see, candlesticks breaking. Don't get me wrong. I don't like going through drawdowns. I'd rather just try to re-enter. Like right here, I would have got it. Like when I took the buys down here, I'm getting out. As soon as it starts showing me this, I'm getting out. Because I don't want to go through this drawdown. Why? Just get out and re-enter. Take the money that they're giving you. Structure start to break. This was the last higher high right here area. Start to break below it. Now I'm starting to truly get out. These higher highs weren't getting broken. This was the high area. It pushed above, came back, retested. It wasn't truly pushing back below. High area, broke above, came back, retested. This area came back, retested with wicks. Broke above this higher high. Came back, retested. Pushed above, didn't start to break below. I'm getting out. I'm gonna re-enter down here if I want to stay in this uptrend. I want y'all to see this, bro. Just practice it. Practice it. Practice it. The more you practice, the more you be better at it. What I teach is an edge on M1. You don't have to really focus in on higher time frames anymore. Just look at structure. Look at structure. Uptrend. This was a higher high, right? Higher high was broken with what candlestick? This one. You don't have to really focus in. Where do we see bullish pressure? Bullish pressure came from here. And it is what? Pushing down. This candlestick is what broke through this higher high. Now it's starting to show me bear. We got bull, we got bear. Where do we take our trade? Inside this area. It's just not structure. Took a trade inside of here, even though we could have just been down and draw down for $16 or 100 pips. That's nothing. Get out for 2,000 pips. Get out here, or get out when you start to see structure broken, because it broke above this higher high, but it never truly came back and closed until like somewhere right here. But this could have been just a second entry. When you use this on smaller time frames, just remember, don't get greedy. Yes, it started to break below, but look, is this not a second entry in its uptrend? This is what Q talk about when he say scale in. We in a trade, an entry right here, went up, start showing me bull, start showing me bear, enter again. That's a scale in, take it right there. Pushed up again, structure is maintaining. Yes, it started to push back below, but what is it? It's nothing but probably another pullback for another entry. This candlestick is what broke through it. Put it right here. You could have took another one entry right here, but I'm not really messing around with it. I'm already in too deep. Pushing up, 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 pushing up all the way up here. Even like I said, turn on HK, I would have been trying to get out these buys because I know, yes, I am on the M1. I know sometimes you can hold it and it automatically flow with the higher time frames, but I am already looking to get out. I'm not that greedy. I mean, I used to be, but like I'm already starting to look to get out. So I'm already in a buy right here. I'm in another buy right here. So I'm riding this buy until structure started to really change, like somewhere like this. I'm getting out. That's a lot of pips. Yes, we still above the 66 moving average. So honestly, sometimes that's why Q use it. The 66 moving average is used as a trend line. So as long as you're still above the 66, you can still, stay in a buy until you start to see stuff like this breaking below the 66 moving average. So yeah, you could have caught this, but I'm not being that greedy. I'm getting out. But also, I want y'all to see something. I can see it right now. Let me see. I'm gonna show y'all this last thing, and then I'm gonna end this video because it's kind of long. I actually caught this buy last week, but I got out super early. Like I said, I learned my lesson. I try not to be greedy anymore. Look at this. All right. I'm gonna show y'all this and I'm gonna be out, man. Look at this. So we got to push up, push down, right? So we can start it from here. Broke above. So we got bull. We got bear. Did we get to the 50? No. No, right? Kept pushing up. Started getting some bearish pressure, right? Structure is maintaining until when? This was the last higher high. This is the higher high that we just broken through. And you see we clearly came back and retested it. We broke through this higher high. What did we do? Came back, retested it. Making this what? A new higher high area. Right? Broke through this higher high, created a new higher high, retest this higher high, broke through this higher high. Really didn't really break, but didn't start breaking right there, right? Creating a new higher high. Then when we start to see what? So this is a higher high up here. Then we start to see what? Structure what? Breaking below what? Our high area. Came back. Even if you don't want to consider this as a break and just wanted to say, okay, it's just a retest. What did it do right here? It pushed up, gave me a double top then. Now, since it gave me a double top, what did it do? It pushed down, breaking our higher highs. What do we know when our higher highs are getting broke? We can now start looking to sell. But even then, look at where are we selling it to? Because when we broke this higher high, we never came back to the 50, right? So we steady pushing up the fib. This is the last area up here. There's somewhere right here. Boom. This is the last area of where it gave me some bearish momentum. Zoom in. Boom. So now we got bull, bear, and we're looking for what? This is now just the uptrend. It's making higher highs, higher lows, higher highs, lower lows, higher highs, higher lows. Then it started to show me, boom, breaking through these higher highs. And when it does that, right? What can we do? Draw up our fib. First of all, I'm highlighting this 50 area because now I got bull. Now I'm looking for bear to our 50. But also I can catch the sell down, which I did. So now I can take it from here and put it at the bottom. And I'm gonna delete this. But just remember, just went back to that higher high. Basically, structure goes back to the wherever it pushed from. Now I can take a sell inside of here. Take a sell inside of there. And Why? Where can I take it? All the way to down here. But like I say, sometimes when you're looking at this strategy, take a sell right here, you can get out right there, right here. With these top tier accounts you guys have $100,000, sometimes $200,000. Why not take $2,000 at a time to get to where you have to do? You can do this 5 times and be done. If you have a $100,000 account, get out. That's 4,000 pips. Get out. Even you can use the 0.5 right there and still pull out $2,000. Get out. Where do you go? To the 27 extension? Get out. Why go through this? Why experience it? Yeah, we got to get to here, but why even go through all this stupid stuff? This is just scaling in entries. You can be trying to take. Boom, came to our mark 50 area. Why? Because we never truly pulled back. We got to push up, breaking through this higher high, but it never truly came back to the 50. And market structure started to break right here in this area. So we just waiting on a pullback, took a sell right here and was going to wait. Like we could have held it to here, but it gave me 4,000 pips, which is good enough. That's all I need. Look at how long it took it. Look at how long it took. If you would have took the sell, so let's just say here, or like I say, turn on HK, turn on HK. HK, right? I'm not buying when my HK is showing me white. I'm not selling when my HK is showing me white. I'm only time I would truly sell is when I see a powerful bearish momentum, like something like this, if it's white. So this is my key area. Now it's showing me, on HK, it's showing me, uptrend still because on this bearish, it's still white. But look at the candlestick. The candlestick is black. Sometimes if you have to, pull up a double screen. Boom. Let me see. Hold on. Double screen. Right? It's no cheating. It's not cheating. It ain't no cheating. You can do this. If you have to know that you're in a good entry, go to the you can do this. You can do this. You can definitely do this. Use HK over here, right? I don't even know where we at right now. Doing December 16th. December 16th. Where was it? Right here. So this pullback right here. So somewhere around here, we was looking for this pullback in this area, right? So if I turn the HK off over here and just want to look at candlesticks versus HK, boom. Where we at? Boom. Now I know we don't want to take a sell until we get inside this area. But as you clearly see at 149, let's look at 149 on this chart. Yeah, we in the area. 149 is still showing me a white. 150 is still showing me white. But look at 150 over here. It's showing me a strong bearish candle. So now I know I can possibly probably jump in. I don't want to miss this 50. We also looking like we're starting to leave this 50 mark. But this bearish, that's a good entry. Now I know I can probably take this and not be in drawdown. So now when that one closed, I enter sell. And sometimes you will see, like if you're on a chart, so you see the HK, it was still showing probably white at first, and then it was probably showing, bearish, and then it kept going white, bearish, and then it started showing probably just white because this momentum was just strong. And then we start seeing a bearish candle. When I start to see this bearish candle break below, look at structure still. Like this was a key area right here. You see something stopped it and then it kept pushing up. We starting to break below it. I'm taking my sell. Confirmation, confirmation, confirmation. Take a sell. Even right here, even if you miss the sell, like bro, structure doesn't change. Sell, bull, scale in. Even if you missed it right there, boom. Why? Because structure changed. Broke below this last higher high was broke right here. Turn on the line chart. This right here was a higher high, kept pushing up. Now we broke below this higher high. What do? Go back, retest our 5061.1.8 area, sell, scale in, boom. All right, y'all. And then look, we clearly see downtrend momentum. Nothing is truly telling me to get out of here. Nothing is truly telling me to get out here. Get out at the 27 extension. That's 4,000 pips. Almost 5,000 pips. Get out. Get out. Well, all right, y'all. I'm gonna stop this video. Yo, I'm gonna drop it in here. I want everybody to give feedback, leave comments. Whatever you have to say. If you need to, DM me, talk about it in the chat. I would just wanted to show you guys that sometimes you don't have to even truly focus on higher time frames. Structure, no matter what time frame you're on. And sometimes when you catch a good entry based off structure on an M1, you can flow with what's showing on an M15. You know, M15 is pushing up, breaking these higher highs, just pushing up, pushing up, pushing up. Boom. Got an entry right here where you could have said this is now in the uptrend. Now it's starting to show downtrend. When it's starting to show downtrend, where do we take an entry? Boom. Don't get greedy. Get out for 23,000 pips. 23,000 pips. Don't say, why did it come back up to the zero? Or why didn't it go to the 27 extension? Who wouldn't take 23,000 pips? Why are you being greedy? That's why we get out of trades. Get out. Hit inside of our zone. Get out. That's 23,000 pips. All right, y'all. I'm gonna really get off now. Hit me, like I said, hit me in comments. We got a group chat. Learn this stuff, bro. Learn it. Life can change. My life changed in a month and a half. Like everything is possible, bro, once you study. So hope y'all enjoy this. I wanted to share with y'all. It's just I back test every day. I'm always on the charts. Just pay attention, man. All right, y'all. I am out of here. Deuces.